weekly market view. I'm here with Nick from our dealing desk. So we've had, at the start of the week, it was quite a dramatic sort of watch for commodities. We saw the biggest fall for gold in a single day that we've seen for 30 years. Do you think that we saw the top for gold and now we're going to head for a downward trend, or do you think it's just a bit of people taking profits?
Well, I mean, interesting, obviously gold's been on a phenomenal rally right back to, well, really the whole decade, the whole century. Gold's been up year on year for every year since 2000. But obviously, yeah, you're right, we saw a big pullback here. I think the markets came from $16.50 per trounce right down to $13.25. I think it made a settle on Tuesday. Obviously started on rumours of the Cyprus sell-off. They're rumoured to have 14 tonnes of their reserves, which in itself is not enough to cause the whole rally, but obviously the panic of Greece, Portugal following suit in order also to get out the bailout. I know Portugal, for example, holds something like 365 tonnes of gold, which is 14th largest holder of gold in the world. And I think just the scare of that sent the markets into a bit of turmoil. I know the exchanges went to the process of increasing their margins by up to 20%, which I'm sure takes a lot of the day speculation out of the market, so you start to see a bit more real trading in it. And on the back of that, we have seemed to have shown a small recovery back up to about sort of 1400. The start of gold. And the trouble with gold, I think, is that it's got a natural bias in the likes of China and India to an extent, but with growth slowing in China, they worry that demand, the natural buyers of gold out there, is starting to dry up, and also it seems to have lost some of its value as a proper intrinsic commodity. It's always had a flight to quality appeal, and I think we're starting to lose that now, obviously, as people are starting to unwind their reserves. So.
As you say, yeah, it was a flight to quality in a sense. So now, with it coming off and people maybe not getting as much return there, do you think they're going to be searching for yields, maybe in sort of government bonds, as we saw sort of a rise in periphery bonds? Do you think we'll see that carry on, go further?
I mean, yeah, that certainly seems to be the switch we've seen this week. It wouldn't surprise me if we start to see more of that.
Yeah. Also this week we had the IMF growth reports, unfortunately sort of bringing growth forecasts down across globally. Particularly in the UK, the IMF have touched on George Osborne and what he's doing in terms of austerity and encouraging him to take on more QE. We saw the Bank of England minutes on Wednesday as well come in, still with that split vote 6-3 against QE, and also the speculation on how sort of its effectiveness. Do you see sort of the Bank of England moving? Do you think they should take on more QE? What's your view on sort of the effectiveness?
Yeah, I mean, it's difficult, isn't it? I mean, it certainly seems to be at loggerheads with the IMF at the moment, George Osborne. Encouraging him to sort of spend his way out of the economy, out of the sort of the recession and trying to establish growth. I mean, it's interesting to hear Carney talking. I know he was out in the States. He was still basically there as a representative of the Bank of Canada, not as our new replacement for Mervyn King. But he was trying to downplay the effects that the central banks can have, and all they can do is encourage the situation for growth. But it was, it's not been a good week for that, for growth all round, but certainly in the UK. I don't think it'd be interesting to see how this goes. I mean, so Carney comes in July. I think we'll stay. I'm not sure we're going to see too much action before then. And also, although I think it's not quite as a close election, I know Merkel is up for re-election in September. So I think there may be. I can't see too much change of movement before those days, which leads us to a summer of probably still lower growth and lower growth forecasts.
Waiting to see what comes. We've also a big week for earnings and reports, performance reports. Have you seen anything in particular of interest or what sort of?
Sure. I mean, well, I think probably the most interesting thing across there. I mean, it's reporting season in the States, in which we're coming towards the end of. There's still a few out there. I know McDonald's, I think, still has to report next week. It's probably the largest of the ones that are coming out. But we have got the bulk of them out of the way. But one of the things interesting is having set the high in the S&P back on, the all-time highs back on the 11th, we pulled back nearly 3%. And yet, if you actually look at, on the real face of it, of the earnings, something like 74% of all the companies that have released their earnings so far have actually beaten analyst expectations, and 49% have exceeded sales expectations. So, from last year's their sales growth. So it's not bad news. I think there's an element of it was a sort of a bit of a banana skin waiting to happen, and the economy is looking for a better situation. And I can accept that a lot of the analysts will have downgraded their expectations coming into the low growth season stuff. And so, but the fact that they've actually beat them, I think it just shows some of the sentiment in the market. we've seen, so we've seen a bit, as I said, 3% pullback, and IBM are off 3.5%, Apple's off 2.5%. Mind you, Apple's probably a different story. The fact that that's probably off 25% on the year, it probably is a different story. But eBay was off nearly 6%. And there's obviously the other side of that. There are companies like Pepsi up 3% or stuff. But I think it's the fact that the big names in the market, Morgan Stanley, the banks didn't come out of it particularly well. That's up over 5%. So the market's pulled back, but I think it's not that the earnings were so terrible, or they did beat expectations to a large extent. But I do think it was just primed for a bit of profit taking, analysts shutting up their shops a little bit, investors rather shutting their shops, they've had good returns on the year so far. As I said, it was all-time highs. I mean, the US has been leading the way. The US seems to be showing signs of recovery far greater than we're seeing in Europe and the UK at the moment. So there's obviously the market perception that the CFTC are doing something right. The central bank in the States is building some form of potential to grow. So I'm not sure it's all doom and gloom.
No, yeah, so watch out for more data next week. Brilliant.
Okay.
Thanks for that, Nick.
Thank you.
We'll see you all next week.